Assalamualaikum. We will continue in chapter 2. Part 2, the cash flow statements. So cash flow, in Malay we call it aliran tunai. So aliran tunai, whatever you come in and whatever come out from your income or wages or part-time sources. So how you spend, how you save, and how you invest from the income that you have. So this one is also compulsory for companies or corporation to have a cash flow, but this one is we specifically use for our personal usage. So is make easier for us to track our expenditure, our savings, our expenses that usually done, and some miscellaneous that we need to do. Okay, number one, we must record all income, this including all the wages, salaries and commissions that you did for your job, or your part-time job, your affiliates, and some more. Okay, the most important thing inside your income record is your own salaries. Your own salaries, your career, and then maybe you do the part-time job for your wages, commissions, and your own business. Okay, then you should have also include the investment income, so you receive any interest or dividends, all those things. Okay. Next, we have to record the cash outflow. In Malay, we call it aliran tunai, keluar, aliran keluar. Okay, this also include fixed expenses that we can't avoid for daily expenses or monthly expenses, such as your house rental or mortgage, or fuel expenses, food, electricities, on other utilities. And then we include too the variable expenses. Variable expenses includes all the expenses that might be your wants instead your needs. Benda yang kita kategorikan as a kemahuan instead of keperluan. Alright. Or some also keperluan, but then they have a fluctuation in expenses. So sometimes you spend more, sometimes you spend less, sometimes you don't spend. And then step 3, determine the net cash flow. Means that all the cash inflow minus the cash outflow. So the difference between income and outflow, it should be positive or negative. So I hope you can create a positive or a zero differences instead of negative. Because negative means that you owe more from your cash inflow or your incomes. So this thing can determine your excess cash every month, and you can accumulate it at the end of the year. Maybe sometimes for saving, or you have specific fixed saving, such as you have to invest or save money inside one account, specifically an amount for every month. Specific, that one is called fixed expenses too. Either way, you can have fixed savings, or you can have a positive cash outflow. So means that maybe you have save later for the end of the year, when you accumulate all the positive outflows, the positive net cash flow, so to invest later. So before we specifically create the cash outflow, so main thing here, you have to create a budget, your spending plan. So you can create spending plan maximizing all your income you have, but then that is not real financial planning. So the main purpose for a budget to help you to live within your income, spend wisely, to reach your goals later, to prepare for emergencies and become wise. And of course, you should live not only within but less at your standard living, using expenses that not at your level of income. You should spend below so you have access, and then you can prepare for your emergencies and investment. Of course, we have to set the financial goals. You have to create a vision for yourself for next 10 or 20 years. You should have what, you should achieve what financially. Then you can estimate income for all sources for your net income inflows, and then prepare the budget for the outflows, and specifically stated that which one is fixed and which one are not fixed, or we call it variable. The variable also include the expenses, but then the expenses is not monthly specifically have to pay. Sometimes you don't have to pay. And then you record it, so you can estimate the actual expenses that may people who have a career next time after they finish their degree, graduates, for young adults. So what they have to pay, maybe before you have your marriage, before you have kids, or while you're having a family. What you have to think to choose one. Next, you review your spending and you have to do some alteration, some changes, so you're living within or below your means. Then evaluate whether this plan or this budget somehow a process that can help you to achieve your financial goals. And of course, the budgeting, the cash outflow should be this well planned, realistic, and sometimes it have to be flexible. Sometimes because some of the utility bills, sometimes we have to expect some changes. We have to pay more, or we have to pay less, and clearly communicated means that you have to be clear what is amount for, what is the budget for, what is the saving for. If the saving is fixed, monthly you have to save some 500 or 300, 100 ringgit. Okay, budgeting system have so much things you can use. The most basic, you can use spreadsheet or use Excel. Okay, I don't want to specific this one to use which one. You can use anything that as long as you can prepare the cash flow properly. Net income, outflows, and nets. Whatever nets is either zero or positive. Positive net cash flow, it's okay, but please don't put this negative. You can use other apps if you are good at it. So minimum is spreadsheet. And then lastly, relate the money management and saving activity to achieve your financial goals. So usually we focus on your saving and your investments. If you put some fixed savings and or put fixed investments, so at the end of year, you should somehow see the income should be accumulated and reinvested. So somehow maybe one or two of your financial goals could be achieved, such as to pay off all your debts, or you can achieve the first cash of 100,000 or 200,000 to buy a house and everything else, or go see around the world for a world trip, right? That one is financial goals. And don't forget, you have deduction in your salaries or your savings too. Yeah. So such as you have EPF. EPF is compulsory deduction, save for your retirement. And then somehow you have to do zakat, 2.5% for your income, taxations. You have to do some research from the internet to see how much you have to pay, or you can ask AI for that. Alright. Okay, to conclude, balance sheet report your net worth. Whether you are a positive net worth, or you have zero net worth, or you have negative net worth. It's okay, either one, because we have to find a suitable goals for achieving next 10 years or 20 years. So it's okay now, or okay when you have your own career next time. To have negative or a zero net worth is okay. Zero net worth is some kind of achievement for me. So means that your assets is equivalent to your liabilities. Means that asset minus liability you have zero. So this kind, that one is actually achievement. Negative is usual for your age and my age. So we somehow want to achieve the positive net worth. Means that we have to evaluate somehow a positive net worth, so we can show that our asset is more than whatever our liability we have. And cash flow shows your income, your budgets, and maybe some surplus if you have, right? And the budget is inside your cash flow statements in the cash outflow. This is the usual past years, but you can use it as a for your group, your individual assignments. So you have to do this: prepare a balance sheet for the assignment, cash flow for your assignment. But this one is cash flow for last month. But I don't want you to prepare for last month. You create a 1 year monthly cash flow, monthly, not year, not daily. One is too messy. And then prepare a monthly budget. How much you want to spend for a month? It depends on what career you're gonna have, where you're gonna sit or stay, and what kind of transportation you use, and so on. And then you can monitor the budget when you clearly finish up the filling all the cash flow statements. So you can see some changes, excess, surplus, or negative. So you can do some changes and apply it later in your life next time. Okay, that's all. Part 2 was chapter 2. Thank you very much. Don't forget to take your attendance in